Today we have Cathie Wood selling $14 million of Tesla stock, but yet expecting Tesla to be at least $1,400 per share by 2027. Does this make any sense? We have Tesla increasing their compute power once again, just in time for the bot and FSD to truly ramp up. A smartphone company is attempting to compete with Tesla at cars, and Elon is being called by Thailand and making some very important relationships. Don't forget to like and subscribe. It's not the first time we have heard the news that Cathie Wood, ARK Invest CEO, has sold a lot of Tesla shares in one go, but yet she remains super bullish on Tesla and believes by 2027 it will be worth at least $1,400 per share as the bear case, or $2,000 as the expected case, and $2.5K per share as her bullish case. She has made it clear that these price targets will depend on the robo-taxi fleet being established. I wonder how high she can see Tesla stock going, and the valuation that she has when she begins to factor in the robo-taxi fleet and the bot taking off, let alone anything else. So you may wonder, why is she so convicted, but yet she's selling so often and so much? Well, she's not a retail investor like myself and you. She has a different strategy because she's managing large amounts of money on behalf of others, and she has to rebalance her ETFs regularly, so trimming a position back like Tesla after a stock run-up, for example, makes a lot of sense. She makes the firm and the customers money and keeps her portfolios balanced, which has been working, as this year so far she has returned 40%. But I think for retail investors, just buy and hold. In their flagship fund, ARKK, Tesla is still the largest position, which is kept at around 10%. And Tesla appears highly by weighting in some of their other funds too, so they are clearly still bullish. What I appreciate about her is how she views Tesla as not just a car company. Listen to this.
We do believe it's the biggest AI opportunity in the world today. The autonomous taxi platform opportunity is going to be a winner-take-most opportunity. So the first company that gets people from point A to point B the fastest and the safest is probably going to be the biggest winner in this space.
Considering Tesla is building end-to-end AI for FSD and a humanoid general-purpose robot, real-world AI, I think Tesla is also the best AI opportunity right now. On Thursday last week, the ARK fund sold around 55,000 shares of Tesla, and this freed up about $14 million for them. They then went on to apparently use about $10 million of that to buy Palantir stock. And we speak about this stock also on this channel. So they are clearly trying to bet their money on the future being heavily dependent and involved with AI. Next up, we have Huawei. They are releasing an EV to compete with Tesla's Model S. And this may seem off because they are known primarily as a phone and smart device company, but they have been partnering with automotive companies for a short while now, and this vehicle is no different. It will be with Chery, and the first production model is meant to be shown in November. The head of Huawei's car unit said it will be superior to Tesla's Model S in various aspects. Maybe it will be a nice car, but I just question how they will scale. How many cars will they be able to make and how quickly? Because Tesla exceeds here. And also, how competitive can they price this? Because again, Tesla exceeds here. Tesla is far ahead of the competition, but it is a good sign that more and more EVs are coming up and being made. We also have the news that Tesla is reportedly doubling their orders for their D1 chips that are manufactured by TSMC. These D1 chips are used in their very own supercomputer Dojo, which is helping to solve the compute power that has been the bottleneck for FSD. They have the data advantage for FSD compared to any other company, which can then be transferred to the bot because of their large fleet of vehicles out there constantly collecting data. But they are now working on the bottleneck to train in those neural nets, which is how to handle all that data. To handle such crazy amounts of data, you need compute power. And this type of scalability that we're seeing is necessary, and they are really ramping up. It's also important to say that by them bringing this in-house and making their own supercomputer, it makes them less reliant on others. For example, Nvidia, meaning if there is a supply issue from a third party, Tesla won't be affected. it shows vertical integration, which again, Tesla excel at, meaning that they directly own and operate the various components of their business. The fact that Tesla is doubling its orders for Dojo D1 chips suggests that they are confident in the potential of Dojo and for the ability of Dojo to assist in solving FSD. It could also suggest that they are really close on solving FSD, so Dojo should not be underestimated. And Adam Jones, a Morgan Stanley analyst, said this: "We believe that Dojo can add up to $500 billion to Tesla's enterprise value, expressed through a faster adoption rate in mobility, robotaxi, and network services, software as a service. The change drives our price target increase to $400 per share versus $250 previously. We upgrade to overweight and make Tesla our top pick." The last couple of points for today's video is firstly that the Thailand Prime Minister said they are anticipating receiving investments of at least $5 billion from Tesla, Google, and Microsoft. He didn't specify if the $5 billion was expected to be a combined investment or funded separately by each of those three companies. But he did say Tesla would be looking into EV manufacturing facilities, Microsoft and Google at data centers. Then we saw even more recently Elon meeting with the president of Hungary at Giga Texas, and although they discussed population collapse, this is a sign of good relationships building. Maybe there will be a future second gigafactory in Europe. And he is continuing to meet world leaders and build those fundamental relationships. Countries really want Tesla to put factories and build in their countries because it helps their economy. And obviously that also helps Tesla. So it's a win-win. And that's a wrap for today's video, guys. I'll be back tomorrow. But in the meantime, you can find me active on X at Hayley Invests. You can show your support on Patreon or YouTube memberships, or you can subscribe and like, which is absolutely free, and I really appreciate it. See you tomorrow.